Hey, what's up, guys? This is Sam, and I'll be doing the free video for Friday, October 22nd, 2021. So I just finished making the premium video for the folks in the gold room, and as usual on a Friday, we looked at everything in the market, top to bottom, bottom to top. We looked at the indices, we looked at the sectors, and usually in these videos, in the free videos, I get a feeling that the good people that watch us on YouTube, they like stock picks. That's the feeling that I get. I don't know if that's true or not, but that is the feeling that I get. But I'm not going to bring you any stock picks today. I'll shoehorn in two or three just to please the YouTube. But I want to show you kind of more importantly something that I'm looking at. So all my cards on the table to start the video. Going into next week, I decided to go ahead and get short the QQQ. I did it at the end of the day. There's already a couple of shorts open in the room, and some of them were added to today, and I decided to jump in on that using my own strategy, but still short the QQQ. And I'm going to show you just a couple of reasons why. So we had a huge run this week. Starting the week, there was some signals that we could see a short squeeze, but this was beyond the pale. We've seen here, and just a couple of points. So one, you're right back to your all-time highs here on SPY, right? You did actually make a nominal new high today, even though it closed lower than yesterday, but you did actually just the briefest tick above the high. So there is that. And frankly, I'll drop one of the lines from Henry Gamble, which is there's nothing bearish about new all-time highs. So keep that in mind. With that said, here's all the bearish stuff I'm seeing. One is this move here is just kind of ridiculous. Now, the move itself it's ridiculous on its own, but what steps it up a notch is the volume. So the white line here is the volume for the SPY over the last 20 days, and you can see that the volume's been declining. But when's the last time that we had even just average volume? We haven't for a long, long time, right? Number one. So it's not even average. Two, not only is it below average, it's actually declining. Look at the volume yesterday. I mean, the volume yesterday was like the lowest it's been in months. And we almost, we almost touched the highs yesterday, which is insanity. So even though you don't see it here, right? I don't have a yellow sell arrow here. When something starts to top, it'll look like this. See this moment in time right here? The yellow arrow here called the top perfectly. Now you got confirmation from the pink and the red, but that's what a top looks like. Also notice how the pink and the green called the low, right? Do I have any of that up here to call a high? I don't. I don't even have it on 195, which is the sub time frame I prefer to use. So it's very difficult for me to show you just the SPY, but there's a chart that I use in the room called the FANG Index. It's a chart that I made myself, and it really is just all of the FANG companies and nothing else, right? So it's just looking at the most important part of the market, and that did crack today. In terms of momentum, right? Keep in mind, this was the only way you break the fever of a move this quick to the upside is by cracking the momentum first. So since the FANGs are what cracked, and it is what I decided to short going into the weekend, let's just take a quick look at them. Or maybe not the FANG specifically, but at least the QQQ. So the QQQ here, notice how much it's lagging the SPY. The SPY is already up here somewhere, and the Qs are lagging. So one, you already have relative strength differences between the two indices, number one. And then number two, notice how here you do have that yellow arrow up there, right? That is the very, very beginning stages of something. If nothing else, it's the beginning stages of a momentum loss. Doesn't mean that this thing has to crater and go back down to about 352, where it came from, but it does mean that it's losing momentum. And when it loses momentum and it's so far away from support, like I have the earliest support that I see here on the Qs is 372. So probably about right around 1% away, right? Maybe 0.5%. From the most aggressive support that I see, which is 372. Anything that's less aggressive than 372, like let's say that 370 level is a pretty big level of support, that would imply about a 1% pull back, which would be normal and healthy, and that's what I'm expecting. So let me kind of round this out here, and I want to leave you with this, and then I'll pepper you with a couple of stock picks, because if we don't, everyone will leave us a thumbs down and unsubscribe and say that our content needs more stock picks. But this is a SPY, right? So here's your previous high, here's your current high, equal highs, XX. I'm going to show you what junk bonds look like right now. So this is junk bonds, this is HYG. The reason I show you this, and it's very simple, this chart should look very similar to the SPY. Even if you don't know what this is, it should look just similar to the SPY. So your highs are up here on this chart, right up here. The SPY is trading at its previous highs. This chart, look what it's doing. It's actually going counter to that, right? So let's just say, for example, in a normal situation, if the SPY is trading at new all-time highs, this chart should be somewhere in this range. Anywhere above the red or the green, anywhere above this, basically, right? Anywhere above here. So somewhere like right here. Ideally, it would be right here, just like SPY. It should look like SPY, but notice how it doesn't, right? SPY had a crazy up week. It was up every day this week except today, and it was only nominally down today. But notice how this is cracking, and it actually made a lower and pretty bad looking weekly candle with weekly sell signals. So I'm going to leave you with this one. This chart is basically telling you that, well, here's what it's really telling you. The SPY and the HYG are telling you two different stories. The SPY is telling you everything's great. Everything's perfect, everything's amazing, we're going to make 1,000 new highs, and we're never ever going to downtick again. The HYG, which is in front of you, is telling you the exact opposite. The exact opposite. When those two charts disagree with each other, one of them has to be telling you a lie. One of them has to be lying. And my job, and frankly your job as a trader, is to decide which one is lying. Is the SPY telling the truth and we should keep piling into equities at any price? Or is HYG telling the truth and we should be a lot more cautious and wait for deep pullbacks in the indices? And for now, I think HYG is the one that's telling the truth. So if you like the market, you have good reason to. Just what I would say is pull in your expectations and really drop your buy entries, right? I don't think this is the market to get. I don't think these are the levels nor the momentum profile market wide to get aggressive. Let me leave you with two picks here. So XLC is the weakest thing that I saw in the market, and inside of XLC, the weakest thing that I saw inside of the sector is Disney, right? So if you can find the weakest sector, XLC in this instance, and the weakest stock within the sector, in this instance Disney, then you're ahead of the game already, right? Most people aren't even doing that. So this just gives you much more probability of success. And in terms of a short, now mind you, I don't have a Disney short. I do have a QQQ short, and I would love to short Disney if it breaks. But in terms of a short, you have this pretty strong bottom there, right around 170, but the signal coming into it is not good. This is a high compression squeeze, and those tend to fire counter trend. So here you have an uptrend. These tend to fire against the grain. So that would imply actually lower, oddly enough. You have this sell signal here that printed a while back. You see how the green line got back to the center and got rejected? That means that this sell signal is still the predominant active signal. It hasn't canceled out. So you should still look at this like a sell. And then you see how the green line here has broken below the red? That's another confirmation. So if you're looking for a short, and maybe you're a little shy to do it against the QQQs, Disney is the play. Disney would be the short. Let me give you one long here. And this one's kind of just off the beaten path a little bit. Just the smallest amount. And it ain't an easy one, but I do kind of like what I'm seeing here. I've seen this before, $10 stocks seem to be popular on the YouTube, so I'll bring it to you. IPOF. This is, I think it's a SPAC. I think it's Chamath SPAC or something. But you have this kind of double bottom with a higher low. That's a really, really good pattern because do you see where it double bottomed? You see how it's double bottoming at the 50? That's really good because why else is that good? Well, because the 50 is rising. So this low is higher or lower, or excuse me, this secondary low is higher than the first low, which is good. That's exactly what you want. Also, you see how your trend oscillator for months actually has been correct. Even though you have no trend here, this is completely sideways. There's no reason this should look this good if it's not bullishly coiled up to the upside. So the last little bit here is it's starting to kick off the floor and round out. So I think if we can start buying this right around $10.10 to about $10, I think it can be bought here. Now keep in mind, if the market really does drill, nothing's going to work. But in the event that the market is kind of just a rotational market and, maybe some money rotates out of tech and goes somewhere else or vice versa, but you have market stability, I do think this is going to work. Also, and I'll leave you with this, this is starting to look a little bit like a weekly flag to me. See it? All of the signs are there. Also, what about these triple arrows on the weekly? So just going to leave this one in your pocket. Let me know if you find anything that looks similar to this or maybe even better for a long. Go ahead and drop that in the chat or in the comments, and I'd love to see what you guys come up with. But that's what we got. So going into next week, I'm looking for a short. I'm not thinking it'll drop very much, but at the same time, I don't know how low is low, right? Because the momentum cracked on the FANG stocks today, and I just want to see how low is low. So I'll leave you with that. Also keep in mind, probably the most important thing that I shared with you in this particular video is the dynamic around SPY and HYG. So make sure you have a good grasp of that, because I think it's going to last you a career, and I think it'll make you a better trader. You know what else I think will make you a better trader? Coming over to simplertrading.com and checking us out. So shameless plug there to close the video. Don't forget to leave us a like, dislike, and a comment down below. Just let us know you were here. The algorithm really likes that. They like interaction. So if you can help us out with that, we'd certainly appreciate it. And aside from that, guys, I hope you have a great Friday. Have a great weekend. And we'll catch up again next Friday. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video. And before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.